Hello, everyone. Thank you for joining us today. We're excited to talk with you about the home buying process. Um, so we're going to get started and just do a few housekeeping slides as people are joining us. So today we are in webinar mode. And that means for people on this call, don't worry, you're all muted automatically. We can't see you and we can't hear you. So you can eat your lunch, you can do whatever you need to do while you're watching this webinar. And you can still participate fully in the webinar and ask any questions that you have during this webinar. You're going to go into the the Q&A feature in Zoom. And if you don't see Q&A, you might need to go on your toolbar. It's the same place you would go to mute or that kind of thing. If you go into more, the three dots on the right, you will see the Q&A feature for questions and answers. You can go in there now if you like and just try it out by letting us know where you're joining us from. We love to hear where people are and anything that you want us to know. You can go ahead and drop a question in there at any time, and we will take most of the questions at the end. So we have some time set aside for that, but feel free to put your question in at any time. This presentation is being recorded. It's going to be posted on our YouTube. Just by registering, you will get the slides. So don't worry about that. You don't need to write everything down. You're going to get all this sent to you. And we also are going to ask for your feedback through a survey. And we'd love to hear your honest feedback about how we're doing and what we can do better. So again, thanks for joining us. We are the Harvard Federal Credit Union, now also known as Harvard FCU. We are not for-profit banking. So a private bank, one of the things that they really need to do is make a profit off everything that they do. We do not need to make a profit off of our members. So we're owned by our members. I am a member of the credit union, and I love knowing that I, own part of my local banking. And that means in general that we're going to try and we're going to get you the best rates and services and products that we can. And so today we're going to be talking specifically about our mortgage products, but there's lots of other great products that we have. One of the things I love to highlight is if you have a checking or savings account with us and you have your debit card, you can get free access to ATMs nationwide. So you don't need to go to Harvard FCU ATM. If you go to any ATM and use it and they charge you a fee, we refund that money to you. So that's just one little way and a nice way that we try and give back to our members. I think that's a nice perk. And of course, you can access us anywhere. Once you're a member for life. So you don't have to close your account if you leave your hospital or leave Harvard, whatever the way is that you became eligible, that's fine. You can join us and continue to be a member and use online banking. We also have a thing called shared branching where you can walk into credit unions and cooperatives nationwide and use bank as though you're banking in person with us. So it's like something that we do as credit unions all together to try and improve things for our members. So that's enough of a commercial about the credit union. If you're not already a member, we do welcome you to join, but you don't have to be a member to attend this presentation. That's fine. So today, I'm delighted to be here with Sharon Cummings. Sharon is our senior mortgage loan originator, one of our senior mortgage loan originators. She's got more than 2 decades of experience with the credit union, helping our members with your home buying dreams. And she's been recognized with several awards, including our Service Champion Award, which is pretty prestigious within the credit union. It's awarded by her colleagues. And in 2020, she was promoted to the Senior Mortgage Loan Officer position. And I'm really happy to have you here with us, Sharon. Thank you for sharing your expertise. I know you don't love speaking, so we doubly are happy to have you here.
Thank you.
So Sharon, you want to take it away,
Absolutely.
please?
Thank you, Jen.
Okay.
Thank you. Thank you, everybody, for attending. Please feel free to ask any questions. I'm more than happy to answer what questions I can answer today. If not, we can always follow up. Today's agenda, we're going to talk about the home buying journey. Um, we're going to navigate through the process. The process is it's a pretty lengthy process, so we'll kind of condense it a little bit. But anytime you want to meet one-on-one with one of our originators here at the credit union, we can go through this in a little bit more detail. We're going to talk about the journey, the qualifications, how we qualify you for a mortgage, what's impacts your mortgage rate, how do we qualify you for a certain dollar amount, and the next step would be becoming a homeowner. What's involved with that? Thank you. So one of the most important pieces of starting the home buying journey is finding a reputable lender, a lender who you can trust, and a lender who you can work with ease. We pride ourselves on our service. We have many products that we offer to all of our members. Everything's pretty digital, so you don't necessarily need to even come into the branch to apply for a mortgage or do the processing of the mortgage. The closing, you do have to go in, towards closing, but everything's done at the credit union. So when you meet the originator works with the credit union, your processor works with the credit union, underwriting, servicing, and then post-closing. So taxes are paid by the credit union. We're an in-house loan servicing center, which is really good. It's one of those things that if you do have a problem down the road or you have a question down the road, you can pick up a phone, call somebody, and somebody at the credit union will be able to help you. We have
Yeah, I want to say that that's huge, having had a few different mortgages in my life. And for those of you who have bought and sold homes a few times, you may have had the experience where you get that letter in the mail that your loan has been sold
Yes.
and it's off to somebody else to service it. And not always the greatest experience, or really just hard to get a person. So having that credit union difference of just knowing that it's local people who work for the credit union.
Absolutely.
Yeah.
Absolutely. And I would say you don't know the problem until you have a problem. But once you do realize
Yeah.
what a benefit it is to be able to come into the branch and see somebody and work with somebody, it goes a long way. We do portfolio lending, and what that means is once in a while when we're doing a mortgage for somebody, something may not meet certain guidelines. We have the ability to still do the mortgage for you, where another lender may not be able to because they're selling your loan or pushing your loan out to another lender. But we have portfolio lending capacity, which means we can service and we can do some mortgages that aren't actually cookie cutter, straight formal mortgages. If something comes up that's a little bit unique, we should be able to help you. We do pride ourselves in our rates. We try to be as competitive as possible. Sometimes we're not always the best, but we're always within range, and we try to be, as close to market as we can be. We offer many products. We offer low down payment assistance options. We offer closing cost credits for first-time home buyers. What's fairly new is what we do now is if you have a certain type of checking account with the credit union, we give you an eighth off the interest rate. So it's a competitive rate, and it gives you a better competitive rate versus our standard rate. So if our standard rate today was 6.75, you open up a checking account, have automatic debit, your rate is going to be 6.625. So it's a great benefit.
Yeah, I think, and I'm always a proponent of using that auto pay anyway. I think that it's just a really wonderful way to simplify your finances and have better financial wellness. So
And not
we
have to
do all
think
kinds
about
of
things.
financial wellness education, and you'll hear me over and over again talking about automating things, for your wellness. So, yeah.
Absolutely. Absolutely.
Okay. Anything else that you need to
I
cover on
think
this
I
slide?
think this is good.
All right.
So usually the first someone will make a phone call with me, or we'll have an in-person appointment or a Zoom call, and the first question they say is, where do I start? Well, usually where do you start is you want to start with your lender. You want to meet with somebody, kind of go over the process a little bit. Um, there's we do what's called pre-qualification and pre-approvals. The difference between a pre-qualification is usually that's the initial piece. When you come in, you meet with a lender or you sit with the loan officer or you have a phone call. A pre-qualification is just a conversation. We don't give you any certificates. We don't pull your credit, but we give you a really good idea of what you can afford, approximate interest rates, approximate down payment, closing costs. So we can give you a really good overview of what to expect without pulling credit. So usually, where do I start? I would say first, make sure you have a good idea of what your credit score is. A lot of our I know through the credit union, we have tools that give you your credit score all the time through online banking, is
Yep,
it?
we're about to, next few slides will cover that,
Yep.
so we'll tell you, if you don't already know, how you can learn more about your
Yeah,
credit
so
score,
that's
so,
great because
yeah.
a lot of, several years ago, people would come in and they wouldn't have any idea what their credit score was. So we'd have to pull their credit to give them, an idea of what's
Right.
going to happen.
Yeah, I love having the tool that we have, Savvy Money, at the credit union. I look, I can see every week what my credit score,
It's
if it's going
great.
up or down, or,
Yeah, no, it's a great tool. We do offer, we'll go over down payments. Um, Years ago, you always had to put 20% down. Well, that's not the case anymore. We offer private mortgage insurance. Um, Most of our borrowers, I have to say, do not put 20% down anymore
Oh,
because
interesting.
everything's so expensive.
Yeah.
We do loans from 3% up to, 75, 80%, whatever you choose to put down. But we would, we would work with you, would go over by putting 3% down, what would be your down payment PMI premium versus putting 5% down. So we'd kind of go over the numbers with you and through the pre-qualification process. We'd go over your assets, give you an idea of how much you're going to need for this transaction. Yet you're going to need your down payment, but there's all these other costs that come into play that are really important. So I like to outline exactly, everything. You're going to need your down payment, you're going to need your closing cost, and then you're going to need all these other costs that are going to come about, your moving expenses and all those other things. So I like to give you a good picture of what to have available and be prepared for, because there's nothing worse than getting a surprise at the end that you need more money or being stressed out, because there's no need for that. So we give you a good overview.
Yeah.
We'll go over your income and how we qualify you. And then we'll go over all of our products. We have many products. We have conforming loans. We have jumbo loans. Jumbo loan, the only difference between a conforming and a jumbo is the loan amount. There's a little bit more criteria for a jumbo. We have low to moderate income loans that help moderate borrowers that give you a better interest rate. We have adjustable rate mortgages. I'll let you talk a little bit about the.
Yeah, so for folks who are first-time home buyers, which can be anyone who hasn't owned a house in the last 3 years, it doesn't necessarily, like, you could be actually someone who just maybe got divorced, used to own a home, but there's been a period of time of 3 years, you can requalify as a first-time home buyer. We also have the program with Mass Housing. So Mass Housing is a state program. We are a certified Mass Housing lender, and just lots of great help. One of the things is that they can give you up to $30,000 or 25, depending where you live or where you're buying, in down payment assistance. And it's technically a second loan, but it gets forgiven. It's a wonderful program that can open up home buying to people who otherwise wouldn't be able to. And there's also mortgage insurance included in that program automatically. So if you lose your job, and can help you span a period of time when maybe you don't have an income. So Mass Housing, I think, is a great product. We have a whole YouTube video because we recently did a whole presentation on Mass Housing specifically on our YouTube. So I think Ty, my colleague, is going to put the link in the chat. So if you are interested in learning more about Mass Housing, you can definitely check that out, or you can just make an appointment with one of our mortgage loan officers and they'll tell you all about it. So
Absolutely.
either way, whatever works for you, if you're a YouTuber, that can be a nice thing.
Excellent.
The other thing I want to tell people about is just from being at this presentation, you don't have to be a member of the credit union. You can access free financial counseling through a nonprofit called Green Path. So we have the link up here you'll get these slides sent to you, so you don't have to write it all down. But the link is here on the screen. If you go through this link to access Green Path financial counseling, you can get free credit counseling, debt counseling, helping you repay debt or make a plan to repay your debt, make a budget for saving for your down payment, housing counseling. They're HUD certified counselors, and they're also federal student loan counselors certified, federal student loan counselors. So if you're dealing with any of those things and you want one-on-one advice, maybe you're a couple years out of getting your mortgage and you're thinking, I want to improve certain things, GreenPath is a great option and we recommend them all the time. Again, they are a not-for-profit and you do not need to be a member of the credit union to use this referral. So go ahead and access GreenPath. I think that's a great thing to do. I also want to mention a tool if you are a member of the credit union, the thing we kind of touched on in passing. If you are a member of the credit union, you can access a free tool called Savvy Money, and that gives you real-time daily updates about your credit report. It gives you help with how to improve your credit score. There's all kinds of things on there that will give you suggestions about how to bring your credit score up. All of that with no impact. It's not a hard pull on your credit, so it doesn't impact your credit score to look at it as often as you want. You can even refresh every day if you want. And so if you are a member, it's literally just a click to enroll. You don't need to give a credit card because it's free to our members. And it's not like free just for a short time offer or something. It's just free.
Free for.
So we really recommend Savvy Money. If you're a credit union member, go ahead and enroll in that. And I think that will be helpful to you. We also just did a whole little mini presentation on Savvy Money. It's just a short half-hour presentation as part of our Financial Fitness Fridays. So that's also on our YouTube. You can check that out as well. All right, so now if you could tell us a little bit about, I know there's a lot of people involved in a
Sure.
home purchase. So
Absolutely.
how do people assemble
Absolutely.
their team?
Absolutely. Key piece to buying a home is having a strong team. Usually we say start off with your lender. That would be whoever you're going to work with or do your pre-approval with, who is going to work with you through the process. What's nice about the credit union is once you choose to work with the credit union, just even through pre-qualification, pre-approval, you can work with the same person. So we would be there to guide you through every step of the way. So you start out with your lender, you maybe do a pre-qualification, get an idea, get a feel for their rates and their products, and their service is really important. Go over, what they can offer you to buy a home. You want someone that's available, a mortgage officer that's available. We take pride in ourselves that we're available pretty much all the time. So a lot of times an offer will come up and offers are due on Saturday at 5 o'clock at night and it's Friday at 7 o'clock and you need to update your pre-approval. Well, there's going to be someone that's going to be able to help you. I always say, reach out to us. If I can't help you, if I'm offline or I'm someplace I can't help you, I have a colleague that I'm going to send that to and they're going to get you your updated pre-approval to you. So we are pretty much always available, and we do take pride in that. So if you need anything off hours or something and it's an emergency, we always say don't hesitate to reach out. We can get it done. It may, most of the time will be one of us, but if not, we would have one of our colleagues do it. So definitely someone that's available. Another perk to being available is a lot of time now I noticed with the real estate agents, when you are putting an offer in, the seller's agent wants to get in touch with the lender. So I see I get a lot of calls from the seller's agent saying, I have a pre-approval here. Can you tell me if, I don't share any personal information, but I would say I can say I pulled credit, I verified income, I know they have the assets. This loan is excellent. You're going to have no issues with it without sharing any information. I don't share anything, but it's reassurance that I've done my job. I've done my due diligence. So that's another part of being available and be able to pick up a phone call, from the buyer's agent to be able to, I'm sorry, the seller's agent to be able to confirm that I did my job. In service, you want someone that's going to give you the best service. And I think we do a great job in that.
And I know I happen to have seen I get a lot of the emails that come in with people commending their MLOs here, mortgage loan originators, and it's true. I think that they do provide excellent service. I've seen some really touching testimonials that people have sent in.
Yeah,
So
and
thank you for
it
that.
does. No, it does. It means a lot.
Yeah.
You're so invested and by the time, you buy your home that, we're actually friends because we've talked,
Yeah.
100 times and we've, got to know each other. So
Mhm.
it's a nice personal touch. The next person, once you just establish who you're going to have as your lender for pre-approval, you do your pre-qualification. I always say work with the pre-qualification first just to get an idea. And that runs right into pre-approval where we would pull your credit and issue certificates. At the same time, you're probably going to want to work with an agent, a real estate agent. It's extremely important to have an agent that knows the area that you're looking to buy in, that's been doing it for a while, that knows the market. They're gonna be a huge resource to you when you go to put an offer in and go look at different properties. They're gonna know, what to put the offer in at. They're gonna compare other properties that have sold in the area, to give you a good idea that, if it's listed for, 525, maybe you wanna put an offer in for 505 because based on the market, this is what houses have been going for. So they'll be a great resource. So a buyer's agent is critical. Um, as I said, you want someone that knows the community, they're experienced, they're full-time, and they're available to you.
Yeah, not someone who's doing real estate as their side hustle or
No.
something like that. And we actually do have a whole webinar. If you look on our YouTube under the home buying forum, there's one called Assembling a Team where we go more in depth about like how to hire your real estate agent, how to hire your attorney, and I think home inspector
Home
is also
inspectors, yeah.
covered, but so tell us a little bit about your real estate attorney too. I think that's
Yes,
good to
yes.
know.
So the buyer's agent, critical. So you'll have your buyer's agent and then the seller will have their agent. And then we have attorneys. We have a list of probably 6 or 7 fabulous attorneys that we work with all the time. They really do a great job. They work with you through the whole process. They answer questions, and they, I have to say, are pretty much on call all the time as well. They're always available to help the members.
Mhm.
Um, we can supply our list of attorneys, but you don't have to use an attorney that we choose. You can use your own real estate attorney if you have somebody that you worked with in the past, or you've been referred to. We'll work with them as well. We'll onboard them and do our due diligence and bring them on board so they can represent you and the credit union for the transaction.
Mhm. Yeah. Okay. Um, yeah, so it really is, you are hopefully surrounded by a team of professionals, and Harvard FCU can be part of that team. We'd love to help you out with your mortgage if you choose us.
Yeah, and absolutely, we have referrals as well, both, realtors and attorneys, but,
Yeah, so if you don't know who to hire for a
right.
realtor, you have some suggestions.
Absolutely, and
Yeah.
I say word of mouth is sometimes the best. Sometimes your friend just went through the process and they had a great experience. Usually that's a good place to start.
So your first step could be just talking to you or to one of your colleagues.
Yes,
Yeah. Okay.
absolutely.
Yes.
The next step I would say is you want to identify a property. A lot of people start off and they don't even know what city or town they want to live in, and that's perfectly fine. They're not committed to one town. But sometimes it's nice when you're not focused in on one city or town because you have more options, other houses on coming on the market.
Yep.
But it's a good idea to have an idea where you want to live. What's the location? Are you looking in immediate Boston area? Are you looking in the Cambridge area? Are you looking to go out a little bit like New Hampshire? To have an idea so when you start looking, you can kind of have a better idea of houses that are coming on the market. It helps a little bit to have a good idea of the location
Just
versus
narrow it down
narrow it down.
somehow. Yeah.
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 And one piece about that is that the realtor that you work with, you want them to have a good understanding of the location that you're looking to to buy the home in. If it's in New Hampshire, you want a real estate agent that knows the New Hampshire property versus
Yes.
somebody who knows the Cambridge property.
Yep. Yep.
What type of property? When I do a pre-approval, just because it's very common that a lot of our members do purchase townhouses and condos, I'll do the pre-approval as if you were buying a townhouse, condo, or single-family home. So that way, when you're going out looking, you might see the perfect townhouse, thinking that you were going to buy a single family, but you see a townhouse and your pre-approval is already for that. So I would say, kind of have an idea of what type of property.
And I like to mention on multifamily is listed here as well. And I like to mention that those mass housing mortgages that we mentioned for low income to moderate income individuals, mass housing will lend for a multifamily. So if you want to buy a 2-unit, a 3-unit, or even a 4-unit, I think, right?
I
Up
think
to
I
4.
think it goes up to 4 units.
Yes, and there's a way to calculate that income from rentals into your overall loan. That is a possibility, and I just think that's a
It's
great
great with that.
option. I know some people who bought 2 families years ago, and now their renter, just pays their mortgage
Yeah,
basically, or
yeah.
their expenses.
Yeah, and mass housing does do a nice job with that
So,
because a lot of times you can't, always use the rental to help qualify, and mass housing is one of
yeah,
them. So that is a great
yeah.
point. Thank you. And then when you're looking at different properties, I always say make a list of must-haves. You definitely want a 2-bedroom or a 3-bedroom home. You let your realtor know that this is something I'm not going to go from a 2 bedroom to a 1 bedroom. I definitely want a 2 bedroom. Just
Yeah.
lay out what you really want, what's important to you,
Yeah,
you know,
I know, for couples, like, you each kind of have to make this list, and then you have to figure out
what,
what are really your joint must-haves. And I know when I bought my house, my then husband at the time, one of his must-haves was a garage, and I was like, oh, that's not that important. I'm used to parking on the street. It's fine. Um, and I have to say, we got this house years ago. We have a garage. Every time I pull into the garage, I think to myself, that was a really smart thing
that
that he
wasn't,
did.
I know,
Happy.
now with parking,
And especially
exactly.
like when there's snow or something like that, I'm always like, but I had my own must-haves too, and we then figured out, filtered it through and said, okay, these are our like top three or whatever must-haves,
And it was a good must-have to
and
have,
yeah, I
yeah,
think that one was a good one, but everyone feels differently. This is really personal, right? How you live
it is,
and what you need in your house is very personal.
yeah,
So, yeah,
yeah.
I think that's great to have done that work
Yeah,
ahead of time.
definitely. And your realtor, when you give your realtor that, they're gonna show you houses that, they're just gonna, every house that comes on the market, they're gonna show you houses that really meet your must-haves, they're
Yes.
not gonna show you a house that has 7 bedrooms when you made it clear, I only want 2 bedrooms, versus, so it's a good thing to go through yourself before you meet with your realtor, and then talk to your realtor about kind of your must-haves and, what you're negotiable about, it would be great if it had this, but it may not necessarily, make or break the deal.
Yeah. All right. So now you found that place.
You found your new home. First step is, what do? You've worked with your lender, you have your pre-approval, you've gone to open houses, you finally found a property and you want to put an offer in on this particular property. Your real estate agent is the key person in putting in, presenting the offers to the seller. So at the time, you'll work up an offer with your realtor and they'll go through different parts of the offer. And the offer is going to say, okay, I'm going to put a deposit down on the home. Usually it's was always $1,000. Now we see it. Sometimes you put it that $5,000. So you work that in with the realtor. The realtor will outline that with this offer, I'm putting in $5,000 to put my offer in for this property. They don't keep your offer. If you don't get the offer accepted, they don't keep your money. So that's money you're going to give if your offer is accepted. They'll list contingencies. Contingencies are really important. In this market, we see a lot of people who waive contingencies because they feel like they're not going to get the home. Just think be really cautious about waiving contingencies. For instance, a mortgage contingency. A mortgage contingency is only protecting you if something was to happen during the transaction. Yes, you've been pre-approved. I've gone through all my due diligence. I've checked your credit. I've checked your income, your assets, and I've said, yes, you're approved. You're well qualified for this loan. But what if something happened during the transaction that made you, now you're not qualified? Let's say your job changed and now you have to work out of state. So now you can't buy that home. So there's been a change in circumstance. Your mortgage contingency is going to protect you because if you don't have that same job and you're not making that same income that you were when we talked, you're making less, you may not qualify. So now you have a way out and it's protecting your down payment, your deposit.
Yeah.
So mortgage contingency is really important, that if you don't get the mortgage, you don't have to buy the home. An inspection, a home inspection, a lot of people say, oh, let's waive our inspection. It's a personal choice. A lot of times when an inspector goes in, they'll identify things that may need to be fixed in the property or things that definitely need to be fixed. They'll look at the roof, and if you need a new roof, it's an expensive fix after putting all your money into a home, buying a home. So a home inspector, I think, is a key person in the transaction. People do waive inspections all the time. Some people, and I don't know how it's done, but a lot of people have a pre-inspection. So when they go to look at the house, they have someone come along with them to kind of do their own inspection while they're viewing the house.
Oh, interesting.
But that could be costly because you're paying someone to come to look at an open house that you may not buy. So
Right.
it's people have ways to go about it, but it is important to have an inspection, especially if it's an older house or a house that that may need some work.
Yeah, there are things that are really quite expensive and might, if you had only known them, have made you think, this is not the house for me, actually. So
Absolutely.
like, what if it has some like serious foundation issues and you're looking at like
Huge, right?
huge amounts of money to fix it? You don't want to be putting your money down on a house that, this is your biggest investment
It's
probably
huge.
for most
Yes,
of us, so.
absolutely,
Yeah.
absolutely. I know when I bought my house, it was that I did an inspection, even though it was, I didn't commit to an inspection. I did my own inspection on my
Mhm.
own. And I was, the inspector went through the house and he told me the little things that need to be fixed and maybe some big things that I wouldn't have been aware
Yeah.
of if I didn't have an inspection.
Yep.
Um, an appraisal, you'll put down that you want to have an appraisal done on the property. That's kind of to protect you that if you overbid on a property that you may not be able to afford that property if it comes in lower. So for an example, let's say you put an offer in 500,000. We do an appraisal on the property and they're comparing all the houses in the area. The appraiser's going to come back and the property comes back at 450. We're going to base the loan or the value on that 450, the lower of the two.
Mhm.
And you may have to come up with some additional money if you don't have an appraisal contingency.
Okay.
You'll put out there what the closing date's gonna be. That's a good negotiation tool if if you're okay to move in 30 days, or if you are flexible and you can stay in the place that you're at now for 60 days, it may help you get into the property because the seller may be anxious to do a quick closing, or they may want a little time themselves.
Right,
So that
right.
could be, being a little flexible on the closing date might help you with your accepted offer. Usually they'll have to get back to you within a certain time frame. So when you put your offer in, usually I don't know if it's 24 hours, 48 hours, I'm not really sure of the exact time frame, but the Realtor will have to come back and say your offer's been accepted, or they have not accepted your offer. They went with somebody else. When you do have your offer completed, within 7 to 10 days, you're going to go to purchase and sale. That's the purchase and sale is handled by your attorney. So I would say in that timeline, when you have your accepted offer, within the first few days, you want to narrow down your attorney. You want to have somebody that's going to help you outline the purchase and sale and make sure that you're protected throughout the whole transaction. They're going to outline if if the wash machine and dryer you want included in the transaction, they're going to have that in your purchase and sale. So they're going to put everything that's important to you, important to the transaction, and important to the lender in the purchase and sale.
Okay, so that's a lot, but remember your real estate agent is driving this process, so picking the good agent
Is
is gonna
very
help you
critical,
with all of it.
very
So
critical, yes.
don't get overwhelmed. Okay, so then we're now into the mortgage application
So your
process.
offer's been accepted. Now you've done your research. You've decided who you're going to work with. Um, you would come in here. It says purchase and sale and loan application. That can be reversed, kind of. You can do either one. Some people wait until they sign their purchase and sale to apply for a mortgage. Here at the credit union, you can apply with your accepted offer. So once you have your accepted offer, you go online, you see our rates are great, you want to get things started, it's going to be a quick close, you submit your application. So that can be
Two
either
and
or.
three could be
Be either or.
reversed. Okay,
Exactly.
good to
Yep.
know.
When you complete your loan application, you're gonna choose to whether you want to lock into an interest rate or you're gonna float the interest rate. Most members lock in at the time of application, but you do have the option if sometimes I always say if you hear talk and maybe they're saying that rates may come down a little bit next week, you may want to hold off and lock in next week. You don't have to lock in. You can float the rate. You can float the rate 15 days up until closing, 15 days prior to closing. So you have a little time. Sometimes it's more stressful floating the rate because then you're watching at the rate every day
Yeah.
and seeing, oh, the rates went up 1/4%, or the rates went, up an
Right.
1/8 of a percent. So sometimes it's best just to feel comfortable, lock in your rate and just move forward, because chances are down the line in the next year, 18 months, 2 years, you're going to refinance. So sometimes it's best just to lock in the rate and move on and not keep going back, looking back and saying, oh, the rate was this, or that. So sometimes
Right.
that's helpful. Once you lock in your application, and once you submit your application, you'll get a loan estimate. And what that is, it's a very important document. It's going to give you a really good, strong idea of what everything's going to cost you. So the loan estimate's going to break down the appraisal fee. It's going to tell you how much the attorney is, give you an idea of what you're going to need for closing. We went over that at the very beginning, but now this is specific to the actual property. What the property taxes are. We be prepared for 5 months of property taxes. So that's all going to be outlined in your loan estimate. So there'll be no surprises at closing, which is nice. And throughout the process, if something changes, we update the loan estimate. So let's say we did an appraisal and now we got to the house and the appraiser realized that there was work that had to be done and the appraiser has to go back out there. Now we have to have a reappraisal. There'll be a fee added. You'll get a new loan estimate because now your fee has changed. So there's no surprises at closing. We'll ask you to provide documentation, pretty much assets, income, but we'd give you a detailed list. Everything can be uploaded online. We'll have you have a secure portal to upload documents, pay stubs, but you would work with your loan officer and we would help you through that whole process and documentation wise and everything else.
I remember when I got my very first loan for a condo that we bought, my father-in-law had given us $1,000 and I remember we had to like go and get documentation that was a gift and not a
That's
loan
yeah,
and
right.
like that kind of thing. So yeah, I remember there was a lot of scrambling and just sort of
It
at the
is.
time faxing, I'm sure now,
No, it
probably,
is. Things do come up.
uploading things.
Yeah, no, you're absolutely right. You're right. So whatever your situation is, you'll have somebody to speak with. If you are getting a gift, talk to your loan officer. They'll explain exactly what needs to be done, the process, and and make it very easy for you. So there's no stress.
Yeah. Okay, so then, the next.
Now the next step
aspect
is
of
your
the- yeah.
application's in process.
Mhm.
You've provided all your documents, your assets. We've done your appraisal on the property came back and the value's there. Your file is then moved over to underwriting. And what that is, the underwriter at that time will take the whole file, review it again, they'll look at your asset, your income, and the appraisal, and that's when they issue a commitment letter. They said that, okay, the originator pre-approved you, but now you're approved based on yourself and the property. The property's been approved. So everything's all set. You'll get what's called a commitment letter. And that will tell you that we're committed to give you this loan moving forward. So you're all set, you're all approved. Between the time you get your commitment letter, the underwriter will make the attorney aware and our closing team aware that now you're ready to get into the closing process. The closing process is done by the attorney and our closing team. As I said, they work together. They'll prepare all the documentation right before closing. We verify, update your credit. We don't pull new credit. We'll verify your credit to make sure that you haven't bought a new car, nothing's changed with your credit. So a key piece is don't try to hold off on making large purchases during the transaction. Because that could affect the whole process. Once they get to closing and we find out that, if you bought a new car and the payment's $700, now you don't qualify, so that you want to prevent that. Do everything post-closing when you feel, everything's all said and done. We verify that you're still employed. And then we also, about 4 days before closing, we issue a closing disclosure. And that's the final document that's going to say exactly what you need to get to the attorney's office, usually a day before closing for the final transaction. So you had that loan estimate at the original time of application and the time you submitted your application. Now you have the closing disclosure. They should be pretty close. There shouldn't be any surprises. You'll have a detailed list of what you're paying for, and the attorney will give you instructions on how to get that money to them prior to closing, so they have the money in their office the day of closing.
Yeah, okay. All right, it's a lot, but again, just step by step,
Yep.
and we'll be here to walk you through that process. So you mentioned holding off until after closing, buying any big purchases,
Yeah.
like don't buy that car.
Right. I would say if something came up and you need a car, if there was an emergency, just reach out to your loan officer.
Okay.
Say I need a car. I'm not going to be able to wait. I have to get back to and from work. I'm looking for a payment under $400. And what we'll do is we will make sure the underwriter is taking that into consideration, or say to you, you can't do it right now. You need to think of something else in
Yeah.
between because your debt to income ratio is high, meaning you couldn't afford it at this moment, the way we're calculating the payment.
Yep.
So just talk to your loan officer. In most cases, we'll just include it in there and we'll make sure everything's okay. So that way you can go buy your car and there's no stress at the closing, but prior to closing.
But if there's anything you don't need to, like, don't take on a bunch of credit to buy new furniture, for instance, for your house or something
Right,
like that,
exactly.
like, you don't need to do that. And yeah, okay.
Yeah. If you go in and 0% financing today and get the credit card, try to hold off on doing it because you're gonna have to explain where that credit inquiry came from. You're gonna have to provide proof of
Yeah.
what you did with that inquiry, whether you took a credit card on or you spent money. So hold off if you can.
Yeah, okay, good advice. All right, so now we're at the closing.
Now we're at the closing. Everything is pretty much all set. Your attorney and you and the sellers will all work on a time that the closing will happen. Usually it's done at your attorney's office. That's where the closing happens. You got your closing disclosure. Usually the money is wired the day before closing. We ask that, the attorney asks that you wire your funds, whatever you're contributing to the closing the day before closing. The credit union will then wire the mortgage proceeds the day before closing as well. So the attorney has the full amount needed at closing day, so they can do what they have to do to, have the purchase go through smoothly. Usually you do a walkthrough. Usually it's the day before closing or the morning before closing. And that's when you go through the house with your realtor, and you want to make sure that if you did negotiate that you want the wash machine and dryer, they left the wash machine and dryers there. You want to make sure that when they took things off the walls, there's not holes in the walls now. So you have one time to go through the house and make sure it's exactly how you expected it to be and what you counted on. So your walkthrough is usually the day before closing or the morning of closing. So that way you can negotiate if anything changed during that time.
Yep. Okay. All right, thank you for taking us all
Thanks,
the way
Jen.
through that process. That was a lot. So Sharon is one of four mortgage loan originators that we have here at the credit union. So our whole team is here to help you, and any one of them can provide the same level of service that Sharon is talking about. So do feel free to reach out, and then the next slide will give you the page to go to. But I just want to mention, actually, before I get off of this, I always like to let people know that Daisy is bilingual, speaks Spanish and English. So if that's something that's important to you, you can reach out to Daisy Familia. She's here as one of our MLOs for you. Yeah, so this is our mortgage page. This is where you can see the current rates and browse through some of those programs we mentioned, like mass housing. You can make an appointment on this page. So this is a great first step for thinking about whether or not Harvard FCU is the right place to get your mortgage. We hope it is. So now I would like to take a look at any questions that we have. One question that we always get is, where exactly does the credit union lend? Because it's not in every state, right? But it's not just Massachusetts.
Exactly, yep. So we opened our membership a couple of years ago, I think. We lend in all of New England.
Okay.
We lent in Florida. Years ago, we only lent in Massachusetts, and a portion of New Hampshire. It was a 100-mile radius from the branch. So things have changed a lot, but we do all of New England and we do Florida. So we do lend in all, that area.
Okay, so Maine, New Hampshire, Vermont, Massachusetts, Rhode Island, Connecticut, and then also Florida.
Florida, yeah.
That's all we have right now.
Right now, but we're open
And
to
so, yeah,
new states.
yes. So we will keep you posted if there are any new states added, but for now, that's where we are. Okay. Can you tell a little bit more about, you mentioned portfolio lending, and some of the people on this webinar, I believe, are physicians that have high debt ratio, a lot of student loans to become a doctor.
Mhm.
So is there anything that you can take into account with that? Because maybe they will have some really good earning potential.
Yes,
So,
yep.
yeah.
So we do have a physician program that it will allow for a little bit higher debt to income ratio for student loan debt.
Okay.
Because what usually happens is if you have student loan debt and let's say you're not in repayment yet, and on your credit report it does not have a payment that's due, and you have a balance of, say $65,000, we're going to use 1% of that.
Okay.
But with the physician loan, there's a different way to do the calculation. So it does help qualify because we know the earning potential will be higher,
I see.
you know,
Okay.
down the road. So we do offer that, and we do offer physician loans with no private mortgage insurance. It does impact the credit, the interest rate.
Interest
So we
rate.
would compare all products. So sometimes we'll have someone come in that wants a physician loan, but they actually fit better in a conforming general mortgage
I
loan.
see.
So we'll work with you
Okay.
and go through all the options and see what's the best fit for you.
So we get you the best rate we can.
Yep.
Okay. I know you touched on this, but what is the minimum credit score that someone needs to get a mortgage from the credit union?
Yep. we say 620,
So aim for 620 or higher.
620 or higher.
Mhm.
I highly, highly suggest get a copy of your credit report and try to work on trying to get your score up there. And the reason I say that is because your credit score impacts a lot of things. It impacts your interest rate and it impacts your private mortgage insurance premium.
Okay,
So there might be something out there on your credit report that you're not even aware of. It may not
Mhm.
be yours and it may be pulling down your credit score.
Right.
Or maybe, there's a couple of credit cards that you have balances on that you could pay off that would help bring your credit score up. So there's ways to work on your score, and I highly suggest look at your score, figure out what it is, and try to get it over 700, 720. I'm not saying that
Yep.
if you have 680, 675, we can do it, we can do a mortgage, but to save yourself some money, try your best to get it up a little
Yeah,
higher
don't
if you
aim for the
can.
minimum, but.
Yeah, yeah, exactly.
Okay. And so those tools that we mentioned earlier
Yes,
about
have it.
Green Path and Savvy Money, we definitely encourage you to use all those tools and any other tools you have to improve your credit. But if you want one-on-one financial counseling, Green Path is a great way to go for that. You mentioned, so if someone doesn't pay the full 20% down payment,
Mhm.
then typically they're gonna have what's called PMI or private mortgage insurance that's required. In addition to making your mortgage payment, you also have to pay PMI. Is that correct? It's like a
Yes.
monthly additional. If at some point I get to 20% equity, say I didn't start out with that, I didn't put 20% down, but I, have paid enough that I get to 20% equity. Can I then remove my PMI insurance and save that money?
Yes, yes.
Okay.
Not all lenders or products allow that.
Mhm.
Yes, once you get to 20%, paying down your own equity, not equity, not economy driven through your own, paying down the principal. Once
I
you hit
see.
20%, you would send a letter to the credit union and we would remove your PMI and that would save you monthly. Every month that payment would go away.
Okay, right.
If you don't, some people don't, we mail you out notices all the time to say, check your PMI, check where your equity is, because you might be close to getting rid of your PMI.
Mhm.
If you miss it, at 78%, we automatically remove it for you. So
Oh,
if,
good.
if for some reason you didn't notice that you had passed that
Yep.
20% equity, we're gonna remove it for you anyways at 78%, I believe.
Okay. Okay.
Another way to get rid of PMI is if you feel your property has gone up in value,
Mhm.
based on, market trends and what's selling in your area. If you have to wait 2 years, but if you have an appraisal done after 2 years and the appraisal value comes back and you have 25% of equity, we can remove the PMI. You have to wait till you get to have 25%,
I see.
not at
Not,
80%. So
uh-huh.
75% with
Yep.
market driven
Got it.
increase, if
Okay.
that makes sense.
Yeah,
Hopefully, yeah.
I see. Um, can you tell me a little bit more? We have a member on the call who wants to know, how does the credit union work with the real estate broker? Like, is the agent in touch with you sometimes or?
Great question. Great
Uh-huh.
question. I will speak with the agent, absolutely. But the first question I ask you is how much information do you want me to share? I
Mhm.
won't, a lot of times an agent will reach out to me and say, oh, I need you to update this pre-approval and increase it by 50,000. I won't do anything until I talk to you, unless you give me the heads up and say, Sharon, it's okay to, if my realtor reaches out to you, yes, I feel comfortable, you can send them the
I see.
pre-approval. So we do definitely work with the realtor and we have a great relationship and we build a relationship with the realtor. But I always get your permission first before I do anything
Okay.
that, could impact your loan or
Yeah.
anything on the
And so
transaction.
the member is in the driver's seat
Yes,
there.
absolutely. I
Yeah.
think it's your call. I mean, I
Yeah.
know the realtor's working for you, so I kind of leave it up to you, but I'm more than happy to, speak with the realtor, update pre-approvals as long as you're okay with it.
Mhm. If someone is not yet a member of the credit union, can the mortgage be their first thing that they do to become a member, or do they have to get a checking account first or something like that?
So you can do a pre-approval and pre-qualification without being a member. We want you
Okay.
to be a member, obviously, that would
Yeah.
be great, but
Uh-huh.
you can come, we could do all the upfront stuff
Yeah.
and when you actually go to put your offer in, your offer's been accepted and you decide you want to work with the credit union, we'll have you open up at least a minimum of a share savings account, a basic share savings account.
Yeah.
And that will go along with your mortgage.
But if you do the other, the Crimson Elite or one of the other elite products that qualifies you, you can get that.
Yes.
0.25%. Is that
1/8, so
1/8?
0.125,
Yeah,
yep, yep,
Okay.
off the interest rate. And
Mhm.
we'll make sure that that's discussed with you during the transaction, so you don't lose out. So we'd have that conversation to say,
Okay.
okay, let's open up, if you want to open up the elite checking, let's do that now so you can get
Yeah.
that 1/8 off.
But if you're not a member, bottom line, first step could be to make an appointment with
Conversation.
you. Yeah, okay.
Yep.
Great. And then we have another person on the call who wants to know what's the typical closing cost
Yep.
and attorney fee?
So usually your closing costs, we say, 1.5% possibly.
Mhm.
I always say, keep in mind, there's closing cost, so the attorney, the appraisal, there's title insurance, there's a lot of things that go into closing cost.
Yep.
So I would say, you're probably looking maybe on a, let's say, a $600,000 purchase, you're probably looking at maybe closing costs of maybe 7,500, 8,000,
Mhm.
maybe. But be prepared to have, we always say, be prepared to have 5 months of property taxes,
Mhm.
have 1 full year of homeowners insurance, and your prepaid items. So all in all, I would say you want to have at least 1.5 to 2% of the purchase price
I see.
at closing.
Okay.
Yeah. And we do give the $500 credit as a first-time home buyer, but we would give you an itemized list. And I always say that's what, when I give you the list saying, okay, you're gonna need your, whether you're putting, say, 5% down,
Mhm.
your closing costs, and then you're gonna need all these other costs that are not really credit union costs, but they're costs that you're gonna need to have available to you at
Okay.
closing. So to give you the overall picture, but I would say between 1.5, 2%.
Okay. And do people have that in cash typically, or are they rolling it into their loan somehow?
No, it's
No.
usually you wanna have
Cash,
that money
okay.
available, and in a lot of cases too, when it's a mortgage, you wanna have 2 months of reserves. That's another piece that you wanna make sure you have available. That can be a retirement account that you have access, like a vested
Mhm.
retirement account. And what the reserves are, is your overall mortgage payment, so it's your principal and interest, your property taxes, homeowners insurance, PMI. So let's say your mortgage payment every month was $2,600. You want to have 2 months in an account somewhere in case of an emergency.
So like 5,200.
Yep, we don't make
Okay.
you take the money out. You can keep it in your retirement account, but we want to know that if there was ever an emergency, you have access to that money.
Yeah.
So when you get into larger mortgages, anything over 806, you want to have 6 months.
Okay.
Yep. So a jumbo mortgage, we want to see, most cases, not always, but we want to see at least about 6 months of reserves.
Yeah. And we also have some presentations on our YouTube just about financial wellness in general, and these are best practices in general, like building up your savings. Part of what Green Path is going to be working with you on is at the same time you're paying down your debt, that you build up some emergency savings, so that you can respond to emergencies and that you're not always putting things on credit cards or that kind of thing, or getting yourself into a bad credit situation, debt situation.
Right.
So, yeah. All right, I believe that we answered all the questions, so we do have a couple more slides I want to get through. If something occurs to you while I'm going through these slides, folks, you can just go ahead and drop another question in the Q&A. We will see it. As I mentioned, we do love to get feedback about how we did on these webinars, things we could do differently. So you will get this emailed to you, this link, but it's harvardfcu.org/survey. And when you get the slides sent to you, it will have the survey link there. And we love to have your honest feedback. So please, we read everything, and we appreciate you taking the time to give us your thoughts. And just I have one last slide, which is that we are announcing to everyone that our branch at the Longwood Medical Area is currently at 535 Brookline Ave. We will be there through the end of September. However, that property is Dana-Farber's building a new hospital. So we do have to get out of that property. So we're going to overlap. We have a new location that we're opening at 1 Brigham Circle. We are going to be opening the last week of July, we believe July 30th. There'll be an email going out to everyone about this, all of our members. So we're really excited. It's a really great location because unlike our current location, it does have parking, which is nice, and it is right at a T-stop as well. So we're looking forward to serving you there. It's going to be a lot of the same member service agents that are at the Longwood area branch now. So look for announcements. We're going to have a lot of like prizes and giveaways, and we're gonna have some special promotions if you do open your account at the new branch. There's gonna be some exciting special promotions there, so watch for that information. And I believe that is all. I think we have answered all the questions, so thank you everyone who participated in this webinar, and thank you for taking the time out to be with us here today, and have a good rest of your day.
Thank you so much.
Yeah, thanks, Jen.
Thank you.
Okay.